The following is a presentation of TFNN. Live at TFNN, the Bull Bear Binary Option Hour. Brought to you by Nadex. Now, Tom O'Brien, Darrell Martin, and Steve Rhodes.
All right, folks, welcome on here to the Bull Bear Binary Hour. Today I'm hosting it with you while Tom and Steve are out, and I'll be hosting the Bull Bear Binary Hour. And pretty excited. We got a lot of things going on. Called out 3 trades yesterday on the Diagnostic Trading Hour for the news plays overnight using the Nadex binaries. And 3 out of 3 nailed it. So, and within usually just minutes of the actual news announcements coming out. And let's go ahead and do a quick market wrap, talk about where everything's sitting at right now. We got the S&P down 6 points. We got the NASDAQ down 15, Dow down 40, Russell down 5. So, not really a whole lot of bad news. Got the sequestrian coming in, but, whatever. We'll see what kind of, effect that really has. We got gold up 3 points. We got copper is down 1.5%. We got silver is up about 0.5% right now on the day. We got corn almost flat on the day. We have soybeans 11 points, and we have oil moving on down. It is down $1.50 right now, 1.5%. We got natural gas is pretty flat on the day for Nadex. There you got euro dollar down 65 pips. You got pound dollar getting slammed down 152. You got Aussie dollar down 9. You got U.S. yen up 38 pips. U.S. Canadian down 8. U.S. franc is up 80. So you got a little variety going on across the board there. Overall, the dollar index is showing strength. A couple pairs, dollar, basically the dollar is a little bit weaker against the Canadian, but it's only about 8 pips. So overall, we do see, King dollar coming back into play, into focus. And, some pretty wild, cool trades going on out there. And, trades that you can place on a consistent daily basis. And that's why I love trading on Nadex. You can go in with defined risk, you can go in with the limited risk, and you can say, which trade do I want to focus on? How can I, what can I do to take advantage of it? And on those trades that you do, you're able to go in and, have trades that have just a really cool P&L profit potential, and on the Aussie dollar trade right there, you could have got in and you could have went short, could have taken profit, could have went back up, you could have got out at break even on the trade. That definitely would have been the trade to do. And, just looking at, let me go ahead. What I'll do is I'll pull up the charts on the trades here. Let's see here. Got that one up. And we pull up one other chart, and I'll show you what I'm talking about. How does this work? How do you put these pieces together in order to have, a good, solid, risk-reward balanced trade? And, how can you maximize the profit on that trade? So we're going to put all the pieces together for you right here. And what we're looking at is yesterday, I called out, I said, hey, we got 3 news things that are worth trading today, and here's what they are, here's what times they happen. And here's how to play them. And so the 3 news trades I said were the pound dollar. So you could go in and trade the pound dollar early this morning at 4:30. And obviously, and then I said this morning, you have at 8:30 a.m., you have the USD Canadian. And trade right there, because with the Canada GDP coming out and the USD announcements coming out, that should have provided some pretty good volatility in the USD Canadian. It did, right away. I mean, it's moved really quick. And then on over to the ISM Manufacturing PMI, I did some research, figured out which currency pair moved the most on that, and said, hey, we need to look at the Aussie dollar. And so by putting those together, we had a whole trading plan, really, that we were able to take advantage of. And so which is pretty cool, because you can, like I said, you can line it all up and figure out what's going to work best for you. And sort of interesting, the chart's loading right here slowly but surely. There it goes. I don't think I've ever seen it do that before. And so we hop on over here, and we're looking at this trade, and we're risking about $10 a side. So let's put all 3 of the charts on here. and I'll walk through how to do these. You know, binary, you can do binary strangles, you can do spread straddles. And right here, we'll open this one up. And what we got is we got the Aussie dollar. And bring it up a little bit more, shrink it a little bit down so we can know everything that we're looking at. And then I'm going to bring this in so we can focus in on the news right there. And then right here, we'll focus in on the news a little bit more. All right. So what happens is, on this one, we can look at, okay, the news announcement's going to come out. It's the ISM Manufacturing PMI, and it's coming out at 9:30. So right here, okay? And so what we're going to be looking for, you know, the Aussie dollar is currently trading right there at, you know, just a minute before, right at basically 1.02. And so we're looking for a risk-reward trade where we can have as little risk as possible, okay, going into the news announcement, and obviously as much reward as possible going into the news announcement. So, you know, we want about a $10 to $15 risk on each side of the trade. And when we go in and we focus on it, then we're able to find, you know, just a whole variety of, you know, different possibilities that we can trade on it. So let me see here. And got the 11 a.m. open. And that allows us to go in and put a trade on. And we can do this one. There's one other one. I want to show you two different actual ones that we were looking at, because we had two different ones that came up this morning as really, really good trades. There we go. Yeah, they pop down like this really fast. And just one more second. I want to make this as clear as I can once I pull it all up for you. Okay. So we're going down and working out this trade. We have, you know, about a combined risk there. There's about $15 risk if we go in and we sell the 1.0196 binary. Okay, so, you know, a few minutes before here, 1.0196, we can sell that for about $15. All right? Now, what that means is 1.0196, Aussie dollar greater than 1.0196. If we say sell, we're saying false. We're saying, hey, at 10 o'clock, it won't be greater than 1.0196. But here's the big thing. You don't have to wait. Okay, you do not have to wait until 1.0196. And you don't have to wait until 11 a.m. You can get out whenever you want to. Now, I like to get out when it hits the price, because I don't want to go, well, it got below it, now I hope it stays below it until 11 o'clock. That seems like a bad idea to me. That's why I want the low-risk trades. So if I'm selling this thing for $85 and the maximum value is 100, then my risk, because I can't buy it back for higher than 100, okay? So if I sold it for 85, the worst hit I could take is $15 on the trade. So that gives me a, you know, basically a $15 risk on this trade right here. And then if I go over here and I can buy this one, okay, this is the 1.0216. And so if I zoom in a little bit on the chart here, we can see what we're doing is we're basically targeting these two levels. See, this is 1.0196, about 6 picks above this deviation level, and 1.0216, that's basically right at the deviation level within a couple of days. So we're right inside of them, which is a great scenario. We come on over here and we look at this at about the same time. Okay, so right over here when we're looking at this, you know, for about $85 at 9.50. We come over here right at 9.50. We can get in this one for about, you know, anywhere between $5 and $10, depending upon the exact, you know, minute you hit the button. So, you know, putting an average out of those two, you're easily looking at, you know, I mean, you could even get it in as high as, on this one, it could have been as little as, what, $12 risk. So, somewhere between $17 and $25 risk, we'll just call it an even 20, make it really simple. And $20 risk, and what you're doing is you're looking to, you know, get out of the trade at a certain price, obviously. So if I sell this contract, okay, and the Aussie dollar falls, I'm going to be able to buy it back cheaper. Well, my goal is to buy it back as, obviously, as cheap as possible, okay? So we're going to go in here and expand this out. So as you can see, like right here, where the news announcement actually takes place, and maybe I can, we'll see if this works. There we go. Thin out those bars a little bit, make it a little easier to read. So right when the news announcement comes out, you got Aussie dollar at 9.50, okay? and all of a sudden, right here, we get right, basically right in the center of the two lines, and Aussie dollar pushes down. Notice it doesn't perfectly hit that strike, but it does hit the 1.0196 because it comes on down to a low price there, 1.0192. So when it comes on down, which is, what time we are, 10:02. So if we come on over here to the 10:02 bar, we can see, it came as low as 37.50. Okay? So when it was flying on down there, so we were actually able to buy the thing back. And what is the rule? Okay? Remember I tell you there's three things you can always know about binaries. You can always know at expiration, they're going to be worth either $0 or $100. Okay? They're either going to be in the money or out of the money. So if you bought it and it's in the money, that means that you're saying the price is greater than the strike. If you sold it and it's in the money, that means you're saying that the price is lower than or less than the strike. If you're wrong, the thing's worth $0. If you're right, the thing's worth 100. I don't necessarily like to play that way, okay? I like to get in and get out. I like to trade the binaries, not necessarily bet the binaries. So if we're trading the binaries, then what we're doing is we're going in and we're saying, hey, when it gets to the binary strike, remember I said there's three things. We got the 0 and 100. When the underlying market, the Aussie dollar, gets to the binary strike, then the binary will be worth $50. Always. Okay? And now we got to account for a couple things for reality in trading. Is we have, a few pips of bid-ask spread on either side. So, okay, so we're not getting out necessarily at 50. We're getting out at like 47 or 53. And then, just knowing the experience of trading is sometimes it doesn't always hit my exact target price. Maybe it gets within a couple ticks, and then it goes the other way. And so I like to get out a little bit earlier, give up a few bucks, still making 1-to-1 usually, but give up a few bucks and get out of the trade when it's just a few dollars away. So what I'll do is I'll go in, instead of like doing the 47.53, I actually use 43.57. What do I mean by that? Well, if I buy first, okay, then I sell at 43. If I sell first, I buy back at 57. So when we got in this trade over here, and then the Aussie dollar plummeted on the news, okay? Dollar got stronger, Aussie got weaker, whatever. Doesn't really matter why, who cares? That's just what happened. It moves on down, and it obviously gets down, and, I could easily get filled at a $57 price right there within just a couple minutes. You're talking 2 minutes making a 100% return on your investment, okay? So check that right there, and you got out of the trade. So you're in, you're out. 2 minutes later, you just made 100% ROI. You risked $20, and you basically made $23 on the trade. All right. Now, can we make it better? We might be able to. So, we might be able to go in here and actually have an even better trade, and depending upon how you do the trade, when you put the trade on, and different things like that. So we could actually even make it, better by getting in at a better time, better strike, better price. And I'm always looking at that way to make it better, and we could have got back out at break even. So stay right there. When we come right back, I'll go into how that would have worked for you and how you could have put it all together.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
All right, welcome on back here to the Diagnostic Trading Hour. All right, so going back through this trick, because I want to make sure you get this down. This is a really cool way. It's actually probably my favorite way to trade on Nadex because it's 2 minutes. It's 5 minutes, you know, it's so short. And as long as you do it right. So that's, you know, that's why you got the deviation levels that we post every night. That's why you got me talking about the different trades where I go through and I analyze the currency pairs and everything else for you to, you know, help you out on this. And of course you can demo trade it. Definitely demo trade it, all right, to begin with, until you get it down, you're comfortable, you're confident, then you can take it to the next level from there. But looking at this, you know, we get in, and whether you get in, you know, a few minutes before or whatever, you know, but whenever you get in here, then you're able to get in at a very low risk on the trade. And that's what you're really going for. You're going for, obviously, you know, low risk trade. And we can see, you know, right here, $10, $12 risk. Maybe you got in earlier. You could leg in if you wanted to. It's a little dangerous, but you could leg in if you wanted to on the trade. But, you know, if we got in, say, a few minutes before, we could look over here. If we got in a few minutes before, you know, would have given up some of the profit on the trade. I like to get in somewhere between 1 and 5 minutes before. It depends on what I see, okay? And sometimes I'll even just set a limit order in there to try to take profit, you know, or get in sometimes like on a bounce or whatever. But, you know, they got some trades over here, $15, $10, $20. But we get in, And remember I talked about, okay, we got in, we went short, we bought it back. Awesome. Okay, took profit on it. Now, could we have made more? Yeah, I'm going for 1-to-1. I'm going for base hits over and over and over and over again on these trades. And yeah, you can make, 2-to-1, 3-to-1, 4-to-1 on the trades. And I talked to a trader today. He made 3-to-1. He did an awesome trade on the pound dollar and went in and made a 300% return on his trade. And that's return on investment, return on margin, return on risk. It's a pretty cool, combo, putting all that together. And anyway, so it goes down. And when the market goes down, of course, the value of, your contract goes down because the Aussie dollar went down. But then the Aussie dollar did this little bounce, okay? Well, on the bounce that it did, here's the cool thing, is you could have kind of hopped in, and you could have got back out at break even or better on your entry on the long side. And that allowed you, okay, right there to be able to take advantage of that bounce. So not only did you ideally make the profit on the short side when it dropped initially right out of the gate, but you actually got to capture more of that profit because you got out of this one with, possibly without losing anything or even making a little bit on the trade. And so whenever I have one side take profit, the next thing I like to do is I like to set the other side at break even. Yeah, both sides could go down and fly up, and when that happens, that's really cool. But usually what I'll do is I'll cancel my take profit order, because I always put my take profit order in the second it happens, because you may not be fast enough. Look, this thing flew down and flew right back up. If you didn't get out, like right in that 2-minute period, and that may have been a matter of seconds, you may have missed out. And it may have went back up for the rest of the day, or may have went up and just went flat. So you never know when that's going to happen. So I get in, set my order, buy it for, $10, sell it for, $85 over here. And then I set my take profit to buy back the sold one at 57, sell the bought one at 43. And comes down, it fills it. And I'm like, okay, great. Well, now I took my profit. I probably should go ahead and get out of this one. So now I can, set my exit to get back out at $10 or, $15, whatever I bought it at, break-even price. Set that, it bounces back up. Sweet, I'm out of that one at break-even. And now I got to keep all the profit on one side versus keeping the profit on this side and taking the loss on this side. Still making 1-to-1, but now increasing my, return to more of a 2-to-1 profit on the trade. And to me, that's a better way to go for a larger return on the trade than trying to go for, making this bigger move. Because you can get 1-to-1 more often than you can get 2-to-1, right? Well, what if you can get 2-to-1 by just having the bounce? And these bounces happen a lot. If you've ever watched news, they'll happen a whole lot. And so that bounce, if you're able to get the other side out at break even, then that increases this trade to, close to a 2-to-1 profit scenario that you can take advantage of. So sort of a cool way to trade it. Now, another thing I like to teach is I like to tell people, hey, when you go in and you do this trade, check out, okay, that it did bounce. Sometimes you miss out on the trade. You're like, oh, I missed that one. I was too late. It bounces up. Well, I've noticed a lot, and you can check this out yourself too. When you get a bounce that pretty much goes like right up to where you were right before the news, okay, so this is where we were right before the news. It goes right back up to that area. A lot of times that can be a great re-entry point on the trade. And so you could hop back in on this trade for a second time or for the first time and just went one direction. And then taking it back off when it hits the same low it hit before. Again, taking it back off right about at 57. So, yeah, it could have made more. Who cares? But you could have made a 2-to-1 and then a 1-to-1. Actually, a 2-to-1 again right after that. So stay there. We'll be right back after this break.
Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91. And only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just one trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And so we just wrapped up how to do a news trade, and we were talking about how to basically not care what direction the market goes. Like, I don't care if it goes up. I don't care if it goes down. I just care that it goes. And, I mean, that really is all I'm trying to accomplish. Like, I just want the thing to move, okay? And when that happens at the same time, you know, I want to know, well, how far do I think it's going to move? When do I think it's going to move? Well, I think it's going to move on the news. And because historically this currency pair moves on the news. And I want to have a good risk-reward scenario. I don't want to get stopped out. I tried trading the news on the futures. It did not work that well. So, I mean, I ended up winning, losing, winning, losing. It was really net more of a break-even thing for me because it just oscillated. You get these things going back and forth, and I mean, it didn't work out that well. But I love it on Nadex. Absolutely love it. And so we focused in on doing a strangle, which is where you do two different binaries. Now we're going to focus in on what's called a straddle, okay? And that's where we use the spreads. And you can use either one. And I'll look at both to see which one's going to give me the best risk-reward scenario. And so what I like to do is I'll go in, and I'll log in, and I'll use the spread scanner, okay? So on the spread scanner, let me show you what that looks like. But it's feeding all the data live from the Nadex exchange in so you can take advantage of it. And what you'll see right here is when you log in, one is we have the deviations that get posted every night at 7:15. So basically Sunday night at 7:15, Monday at 7:15, Tuesday, Wednesday, Thursday, Friday. Well, I guess Sunday through Thursday we're posting them for the following day. So on Sunday we're posting them for Monday, on Thursday we're posting them for Friday. And so go to Spread Scanner over here, and I go, you know what do I want to trade? Well, I want to trade the Aussie dollar, okay? And when I do that, then I can say, you know, I want to do both because I want to do a straddle. And, you know, if I don't have any filters built in, it'll show me everything, which is all the stuff you'd be looking at inside the actual Nadex platform. But this is from the Nadex platform. This is a live data from it. And so we're going to go and we're going to say, you know what, minimum reward risk ratio, 1. So I want to be able to at least make $1 for every dollar at risk. And I really don't want to risk more than $100 a contract. Now, I may do 100 contracts. I may do 10 contracts, but I don't want to risk more than $100 per contract, okay? And so now I'm going to go down and I'm going to look and see if I can find the best risk-reward scenario that's available. And what's cool is you can actually click on them. And you could say, you know, maybe you don't want the ones that are further out in time. Maybe you do. You know, you can find the ones, but the ones that are further out in time, maybe they're, you know, they have to move too far for whatever reason you don't like them. And if you just wanted the really short-term ones, you could say, I only want ones that expire in the next, you know, say 2 hours. And it'll give you just the short-term ones, okay? Or you could flip that around. You could say, I only want the ones that have at least 2 hours till expiration. And then it'll give you just the long-term ones. So you can do it however you want to. So you could build a straddle right here on this trade. And by doing that and seeing, you know, does that line up? Yeah, see how the floor and the ceiling both touch each other. That's very important. It's a straddle, okay? Your floor strike and your ceiling strike need to be the exact same. They need to touch. Okay, if they're crossing over, it's a whole different strategy. And it takes a little more, you know, there's more to it than that. So this right here, very simple strategy, requires a move of about 21 pips in either direction, because we got 15 and we got 7, so 22, I guess, pips. And we have about, you know, a little over $25 worth of, like, when you add in exchange fees on the trade. So we're really looking to make about $50 on this trade. We're looking for a 50-pip move if we're going to do that trade. So we may not want that trade. Well, let's go down and see what happens if we go down and we flip that around and go, you know what, I only want the ones that are, you know, 120 minutes till expiration. Well, if I scroll down and do that, then what I can find is, all right, well, we got some here that have pretty low risk, and maybe some that don't have to move as far. Like that one only has to move, you know, a few pips. That one only has to move a couple pips. And we can see if we, you know, what's the best possible trade. Now, some of these have to move further. They're out of the money. Some of these don't have to move that far at all. They're in the money. And when I look at them, I see that right here, I think this is a great lesson. I'm going to stop and go into this lesson real quick. And look at this, okay? We have 21 minutes till expiration, 81 minutes till expiration. All right? They have the exact same floor and ceiling, 1.0160, 1.0260. They both have only 3 pips to break even. They both have a $43 risk, and they both have a $53 reward. So they're the exact same trade, except, okay, except for the fact that one of them has another hour until it expires. And so with that simple, you know, scenario right there, you definitely see, like, that would, why would you choose the one that's going to expire in a matter of seconds when you have one that is going to expire here in just, you know, well, I mean, one expires in 20 minutes, one expires in 80 minutes. You don't get any edge. You don't make any more money off of that trade. So you might as well choose the one that is going to give you another, you know, hour that doesn't give you any more risk at all on the trade. And that's why I like the scanner. There's things you can see using the scanner that you probably would not even notice if you were looking at all these things and trying to manually calculate all of them in your head. Is, wow, I had the exact same risk and the exact same movement to break even, the exact same reward, and which is really rare, by the way, to get all 3 of those things lining up perfectly like that, with more time. Usually more time means it has to move further. So the mere fact that that's happening, you know, makes that easily a better trade. But so let's say you chose that one, and then on the flip side, we'll say we chose this one right here or this one right here. So which one do we choose? Well, this one has 19 minutes, okay? This one has 79 minutes. They both have 1 pip to break even. They both have the exact same risk. They both have the exact same reward. So would you rather choose one that has 19 minutes till expiration, where you're risking, you know, 40 or 50 bucks on the trade? Or would you rather choose ones that had the exact same risk, but give you another hour to be right? Okay? So, I mean, that right there, that scenario ought to hopefully really lay it down for you when you're looking at these, that, you know, using this scanner, I mean, pays for itself. I mean, 1 hour could mean the difference between, I mean, I think you'd agree, 1 hour can easily mean the difference between a win and a loss. And you can get out whenever you want to. So it's not like you're, you know, sacrificing something for taking on that hour. What you're doing is you're giving yourself an hour with no additional cost, no additional risk, and you're able to be right on the trade. And so, you know, I just want you to see that whole scenario laid out, so that way you know when if you are using the scanner, which you can try out for free, when you're doing that, you actually know, you know, that's the value in it. That's where you want to use it to help you find the right spreads. Not only to find them quickly, but to find the best ones in a matter of seconds. And, you know, there's no reason I would choose this spread over this spread. I only have 17 minutes to be right. Okay? So, I mean, that just really, really, I think, I can't make it any clearer than that. All right, so let's get back onto the straddle topic right here. On the straddles, and looking at these trades, trying to figure out, you know, which one I want to do. If I was doing a straddle right now, then I could go in and I could choose, you know, obviously any of these right here. And these two have the exact same, you know, scenario going on too. I mean, they're both like 16 pips away. That's pretty far away. And so I may have to figure out, you know, which one I want to, you know, a balance of. But if we go in and just, you know, throw one on to show you exactly, you know, how it looks, like right there, then what you're going to see is about a $20 risk trade, okay, which means I have to move about 20 pips, so I need 40 pips movement to break even, and I have a straddle, and now I can get out of the trade when it hits either strike. And that's, I mean, that's pretty much it. That's how it works, okay? So now that I know that, then I can go back over, and I can pull up a couple of these spreads we were looking at before the news. And throw the Aussie dollar chart right back up there. And go, okay, so how much risk did I have on this trade right here? Well, before the news, I could have went in. I could have bought it at 1.0212. So, I mean, you know, if we go and maybe put the ask settings on there for the buy, so this is a buy side. All right, so before the news, 1.0214. And on that trade, so you're talking $4 is my risk on this trade. Okay, $4 before the news here. And then on this one over here, we go in before the news, and we'll make sure that one is on, you know, bid, so we're looking at the sell price. Okay, so we're selling this one at right about the same time. You know, doesn't really matter, but I mean, let's say it's 9. You know, we could do 950, 945, whatever. But right here, we'll look at it, and what we'll notice is we get sold for about 1.02, which is about 10 pips risk. Okay, so just a few minutes before the announcement. We could also go back further like we did on the last one, and we'd be looking at about, you know, or really about the same thing, about 10 pips. So you're talking about $10. So $10 risk on one side, $5 risk on the other side. So I have a $15 risk. I actually like this trade better than the binaries. I have less risk on the trade. So that's a huge benefit, right? And I only have $15 risk, which means I only need to make $15 on either side. Okay? If I can make $15 on either side, then on that trade, I've now made 100% return on my investment, on my risk, and on my margin, on everything. And so if I get in and I sell this thing right over here at 1.02, you know, 100, I need to buy it back at 1.02 or 1.0185. All right? So it goes in, it drops down, we get a low, 1.0191. We're not quite there. Notice this took a little longer. Remember, the binary one was in like 2 minutes, okay? So it took a little longer. We go down, and we finally do get filled at our 1.0185, like right over here, all right? So before it pulls back up. So we actually had to move down a little bit further on this trade than the binary one to make our money. So that means that's, you know, I guess in one way that's a disadvantage, but we had less risk on the trade. So both trades made 100% return. One of them made it in 2 minutes. One of them made it over a period of time. But here's the big advantage, and this is one thing I want you to get. On the spreads, okay, let's say, you know, on this news announcement, let's say it would have just dropped down a little bit, never filled our binary order like it did, and popped back up and just went sort of flat. Well, on the spreads, I sold it right here. If it moved down and let's say it expired right here. Okay, at 1.01, 92 from 1.020, and I only made $8. All right. Well, remember I risked $4 on this side. I made $8 on this side if it expired here. On spreads, it's not an all or nothing. So if it doesn't move much on the news announcement, the edge, okay, the big edge on the spreads is that they could actually still be profitable or maintain some of the risk value versus being an all or nothing. So it's much more like buying. It's like selling the Aussie dollar at 1.02 and getting out, 1.022 and then getting out at 1.02 or 1.021 and getting out at 1.02. So it's, the difference where you buy and sell. And it's much more, like I said, it's just like the Aussie dollar. If I sold at 1.0210 and bought back at 1.020, if I sold at 1.020 and bought back at 1.090, I'd make 10 pips. And it has nothing to do with where's it at expiration, except for that's just going to be my exit price. So versus on the binary, that's going to be my over-under true-false statement if I held to expiration. Now, again, I don't hold. So the advantage of the binaries, they're more volatile. They're going to move faster. You can take advantage. If you use that 57-43 rule I taught you at the beginning of the hour, if you'll take advantage of that, then that'll be a huge, huge advantage on you on doing this. And so, they definitely want to make sure that you are taking advantage of all these. And let me see here if I pull this up for you. And I think we may have had a little drop over there on the... Here we go. Put that right back up there. Just make sure that is showing over there on Tiger TV. Sorry about that. And pull those up for you. And you can use this to go, should I trade the binary or spread? What's the difference? And one thing I tell people to do, and I think this is probably one of the best things you can do, okay, is do both of them. Do them both in a demo account. Do a spread on one, do a demo on the other, okay? And by doing that, you'll learn to see what the advantages and disadvantages are. Also, open the charts on the spreads. Don't trade the charts on the spreads, but open the charts on the spreads and the binaries, like what I just did with you today. See how the price moved. Okay, see what the advantage is on that. Was there a good way to take advantage of that trade with how the price moved? Could I have got in? Could I have taken profit? Based on how the market moved, how similar was it? Things like that. So learn to see sort of the ebb and flow, the difference between the two as they move back and forth. And, like I said, demo trade. Do a lot of demo trading with it so you can compare them and know which one is going to be best for you. Now, the thing is, people ask me, probably the number one question I get, well, what's better, binaries or spreads? And I'm like, well, there's no answer to that. So they're both great, and it's really a trade-by-trade basis. I'll go in and I'll look at the spreads and I'll look at the binaries, and sometimes I'll do both. Sometimes I'll do one or the other if there's a clear winner. A lot of times I like the spreads, but on the binaries, here's the other advantage on the spreads is, like I said, we talked about that already, where if it doesn't expire all the way down, you can still actually make money on the trade. The binaries, you'll make it faster usually. But also, let's just say it just keeps going and going and going. I don't have to take my profit immediately on the spread. Now, I want to have a ticket up ready to get out if this thing pulls back like this. But if it just keeps going, I could trail my stops and potentially make a 2, 3, 4, 500% return trade on a spread, which you probably wouldn't be doing on the binary because you need to get out because if things reverse so fast, it'll kill you. All right, stay right there. We'll be right back after this break.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
All right, welcome on back here to the Bull Bear Binary Hour. And what we're doing right now is we're going through and talking about how to trade the news, but how to trade the news without caring what the news says. Okay? So ultimately we're trading the chart. We're using the news to notice when to trade, but not what direction to trade. We're buying, we're selling at the same time. Okay? If it goes up, we're taking profit, but we don't have that much risk on our sell side. If it goes down, we're taking profit, but we don't have that much risk on our buy side. And we're looking at Nadex binaries and spreads. Now, if you haven't used these binaries and spreads before, what you need to do right now is hop on over to TFNN.com. You need to click on the Nadex banner. Do this right away. Go ahead and hop on over there and click on Create Account. You can open a live account. It only takes $100 to fund it. You saw trades I showed you today that only took $20 to put on. Okay? Quick start. You can fund an account within less than 5 minutes and you can get going. Okay? And you also need to get a demo account. Go to Our Products. Click on it, Demo Account. Fill in the information with your username, first name, last name, phone, and email address, and click Apply for Demo. And you'll get an email within a few seconds. This literally takes about 15 seconds to set one up. And if you'll email me, you can get my contact information there, right there on the website. I'll let you know how to get this demo extended out for a year versus just 2 weeks. Okay? So make sure you are doing that, and that way we can get you, completely set up and ready to go on the trade. And you can learn how to follow along as I'm talking about this. You can learn how to use the deviations. But get that account set up. Next thing, hop on over here and click on Diagnostic Box Spread Analyzer. Click on that link. Get your 2-week free trial, okay? Whatever you decide to do after that, your choice. But get your 2-week free trial. Get access to the deviation levels every day. See the difference they make. This should pay for itself in a matter of a day or two, okay? If you're using it correctly, it'll pay for itself within a day or two. With very small risk, you'll knock this thing out. But you got 2 weeks to make it free. So hop in there, use the analyzer. You can do this during the day or you can use it in the evening, okay? And combine it with the deviations and trade just these news trades and expand from there. But that alone will easily pay for itself. I've called out multiple trades this week. I want to say every one of them's worked on the news trades that we've done this week. So, you needed the deviations, though, to do them correctly. So check that out. Get that going. Now, get some live training. Come on out. We have a free live workshop out in San Mateo, March 16th. So you're in there. You got your Nadex account. You're learning how to use it. And we got platform videos. We got binary videos. We got spread videos. All that happening inside that Diagnostic Spread Analyzer subscription you're getting. But also come out and, meet me live. Meet Dan Cook from Nadex. Meet Tommy O'Brien as we're going to talk about setting up trades, identifying trades, putting them together, using these tools to day after day after day, go in to, ideally pull profits out of the markets. And, there's a lot of different news sites you can go to. I like to look at a lot of different ones. But right now, I just want to give you a quick summary on what to look at that's coming up this weekend. So Sunday night, we got building approvals, Aussie dollar. There's your next trade, 7:30. Use the deviations. Check out the binaries and spreads. And I'm talking about Eastern time when I call it the times now. And then Monday. On Monday, we got construction PMI on the British pound. So you got pound dollar, sterling dollar there. You go over 4:30 a.m. Okay, that's your next trade. Monday night, you got a double hit. You get to go in Aussie dollar at 7:30 on retail sales. And you get to come in again at 10:30 on the cash rate. And basically, they're interest rate statements. So they're right there. We just laid out 4 trades for you to take advantage of. Do those. Do them right. You could potentially cover the entire spread for an entire month in one day. All right? All right, so I hope you all have a great day, a safe day, a great weekend. I will see you next Monday. Stay tuned. We have another great show coming up for you right after this.